So over the past several years of my trading career, I've tried a number of different ways to help accurately predict what the market's going to do. I've used, just as I'm sure you have, indicators, oscillators, but there's one way that by far has outperformed the rest, and it has nothing to do with an indicator. It's actually based solely around price action. And what I'd like to do is share that accurate technique with you today in this video. This is a technique that we use week after week here at the Trading Channel to help us predict market moves. And it helped us predict this move you see here on the dollar Swiss, where we came down into this previous level and have since made over a 100 pip rally. So if that sounds like something that's gonna be valuable for your trading, one, make sure to stick around for this entire video. Two, make sure you click that subscribe button to be alerted whenever we come out with other free educational content like this. And last but not least, make sure you go ahead and click that like button to help support the channel while the intro and disclaimer roll. And I'll be right back to share this extremely valuable content with you. See you guys on the other side. Hey guys, so welcome back. In this video, we're gonna be going through a few different things, and let's go ahead and talk about that first really quickly. The first thing we're gonna look at is proof of concept. So I've told you guys that this is a really accurate way to predict price action, but in order for you to really trust that statement or try it for yourself, you need some type of proof. So what we're gonna do is take a look at some predictions we've had from last week that ended up working out really well using this technique. Directly after that, I'm gonna teach you this exact technique that we're using in order to make accurate price action predictions. And last but not least, we'll be taking a look at the top 5 major pairs and making our predictions for this week on those pairs to give you guys some value going forward. So let's go ahead and get started with the video. Here we have the USD Swiss. On this pair, as we talked about during the intro, this market's had over a 100 pip rally from a level in the market that we accurately predicted would act as support. And how did we do that? Well, that's exactly what we're going to talk about as soon as we get back from this quick clip showing you guys exactly what we were predicting out of this pair last week. So let's take a look at that clip and I'll be right back. But we will be continuing to look for possible long trades here on the dollar Swiss around this level, because what we're expecting is at least a retest of this resistance level and possibly even trend continuation all the way up to 0.9684 out of this pair. And if this market gets up to 0.9684, that's a level we can look for possible shorting opportunities. All right guys, so back here on the dollar Swiss, as you can see, this market pulled down into that area exactly where we were looking at last week, around 0.9563. We ended up getting a nice push, a nice rally out of this market and got right up into what level? The level we pointed out as possible resistance right here, a red dotted line, expecting that level to help us with some counter trend moves. So as I said, proof of concept. As you can see, this worked really well last week here on the dollar Swiss. And if you go back a few videos, we produce weekly market prediction videos each and every week. And there are many times that these predictions end up being very accurate. Again, you can go back through the previous weeks of videos in the weekly market prediction series and see this working really well the whole time. And this is not me telling you to go out and blindly start placing trades based around this knowledge. That's not going to make you a profitable trader. What I hope to accomplish with these videos is showing you guys how simple it can be to predict price action and give you a technique that you can apply to your own trading plan. Everything that you see here must be tested, and you must make sure you're comfortable with the risks involved, not only in trading, but in the specific strategies and techniques that you choose to use. So now that we've discussed that, let's talk about how we were actually able to make this prediction and how we make predictions each and every week. Well, the first thing we have to talk about is the time frame. If you look right up here, you'll see that we are on the daily time frame here on the dollar Swiss. This time frame works really well. The weekly time frame, using the technique we're going to talk about in this video, works really well also. But for me, I find a lot more trading opportunities using it here on the daily time frame. So high time frames work better than low time frames. Now that we've established that, what else are we looking for on this higher time frame in order to predict these price action moves? Well, it's actually a very simple concept that we've discussed here on the channel before, but repetition is key when you're trying to learn anything. So that's why we're discussing it again. As you can see, we had a market here on the dollar Swiss that was pushing up to a resistance level. Then what happened? This was our first clue once we broke above this resistance level. After breaking a previous resistance level, that resistance level that was broken is a high likelihood place for the market to pull back to and rally out of. in an uptrend, or if in a downtrend, that very most recent structure support level that was broken is going to be a very accurate place to predict that the market is going to continue in trend to the downside. So that very simple concept applied out here on the daily chart is what is made for some really accurate predictions for us here at the trading channel week after week. Now, whenever you add this most previous level of structure that we just broke, which would be right here, our resistance level, whenever you add that concept to a structure level that has been tested multiple times, as you can see, this level was used as resistance twice here and as support by our big green candle right here. When you combine those two factors, that's what has come together to create one of the most accurate ways I've ever found to predict price action moves. And when using these two concepts together, you're not only predicting price action moves, you're also predicting them in trend continuation. As you can see, this market was breaking structure levels into new highs. And the only way for this concept to work is if the market's breaking structure levels into new highs or breaking structure levels into new lows in a downtrend, in order for you to wait for that pullback into that previous level that maybe combines with another previous level of support looking left and give you a possible accurate trading opportunity based around your trading plan. So take this concept, go out in the market, test it for yourself, see how many times it works versus doesn't work, apply different things to this. You can apply indicators to this to help make it more accurate. There's nothing wrong with that. And you can apply anything else that already exists in your trading plan to this as well. And guys, I know this concept sounds simple, and for a lot of new traders, for some reason they believe that trading has to be extremely complicated. But in reality, the more simple your rules are for trading, the easier it will be for you to follow them. And more complicated doesn't always mean more accurate. This is extremely simple, and I'm not exaggerating when I say this is one of the best ways I've found to accurately predict market moves. This extremely simple concept of understanding trend and structure levels. And guys, if you'd like more advanced training on structure levels, trend, along with the entry reasons and the entire trading plan that we use here at the trading channel, then you can learn more about that in the EAP Training Program, which there's a link for in the description. But otherwise, let's continue the video. So now that we've talked about what we're using, let's go ahead and apply this to some other markets. Here we have the dollar Swiss, right? We've already talked about last week's prediction on this pair. It was a move up, and we also talked last week about a prediction of this market coming into 0.967 and possibly finding resistance. It's exactly what we're still expecting. We're expecting a counter trend move from this level at 0.9697 to push the market down somewhere near where our most previously broken level of resistance, because we know that's a high likelihood place for this market to get to and then turn around in trend continuation. So that's what we're predicting next here for the dollar Swiss. Let's go ahead and move on to another pair now. Next up, we'll be looking at the euro dollar. So since the beginning of the year, the euro dollar has been doing the same thing. It's just been consolidating. And what we've been capturing here at the trading channel is moves off of resistance and support. Just last week, we had a prediction that this market would find support from the 1.2239 level. And that's exactly what happened here on this pair. Now, what are we looking for going forward? We've created a new sort of resistance level right in here around the 1.2450. If the market gets up to that level, I'll be looking for that as possible resistance for a counter trend opportunity. If we get above that, around 1.25 even will be the next level to look for a possible trade here on this pair for us here at the trading channel. Now, if this market pushes down, we'll be looking yet again at this support level to either provide us with support and give us a possible trading opportunity, or to break so that we can start looking for trend continuation trades on the way down. And that's our predictions here for the euro dollar. Next up, we'll take a look at the dollar yen. So here on the dollar yen, we had another accurate prediction from last week. This accurate prediction came from a previous structure level. And if you'll take a look, what was this previous structure level? Well, last week, this was the most previous level of resistance that was broken. It also combined with other levels of structure that we saw looking left in the past. Once the market pulled back down into that level, and since then, we've had a nice rally up of a little over 100 pips. We expected this market to get somewhere around this previous level of resistance, and I'm actually going to play a clip showing you guys this from last week's video, and I'll be right back after that clip to give you guys the predictions we have going forward here on the dollar yen this next week. So we have another major level of structure that is formed. The reason is because we have 1, 2, 3 times the market has used this level as support and resistance. Now this market broke into new highs and pulled back directly to that level. We're currently just hovering around this level at 106.82, but we will be looking on lower time frames for possible entry reasons for that trading plan to come together on this dollar yen pair and give us a push up, because we are expecting this push up to come into the 108 area right here at this previous major resistance, combining that with these previous major support levels. So that's initially what we're expecting. All right, traders, so this market was hovering somewhere around the 106.8 level last week, and as you can see, we had a pretty nice rally out of this market. We ended up pushing up directly into this previous level of structural resistance that we were talking about becoming possible support. So another instance where predicting market moves in this very simple way has paid off pretty well. And let's go ahead and talk about what we're expecting in the future here out of this pair. Well, since we have created this double top situation here on the dollar yen, we're not really looking for a trade at the moment. What we'll wait on is to see if this market can get back down into the 106.8 level once more, give us a possible long trade, or if we see this market head higher, we're looking at the same level as a possible counter trend move to the downside here on this pair. And those are the two predictions we're looking at here on the dollar yen. We'll go ahead and move on to our next pair now, which will be the pound dollar. On the pound dollar, last week we had a prediction that this market would come into our level around 1.425, between that and this wick right up here that you can see looking left, and give us some type of entry reason to push the market lower. We got into that zone, and that's what we've had so far here out of the pound dollar. But what are we expecting next out of this pair? Well, since this market has just come up high into this resistance looking left, and we've broken above the most previous level of resistance, we're actually waiting to see if we can get some kind of long opportunity for trend continuation up into 1.4409. A really good place to look for that opportunity is if this market pulls back into 1.4092. That's a level that's acted as support and resistance multiple times in the past. As you can see, little spouts of support and resistance in through here. So again, a great place to look for trend continuation for us here at the trading channel is going to be around 1.4092 out of this pound dollar pair. And the final pair we're going to take a look at and predict the market moves for using this very simple but accurate technique is the Aussie dollar. Here on the Aussie dollar, we predicted a possible shorting situation coming out of this zone right in here. The market's still hovering around in this zone, so our expectations are still the same. We're looking for possible reasons to go short out of this pair from the 0.7805 level. Now, if the market starts to push down from this level, a good place to look for some possible long opportunities is 0.7715, and if we get a break above this level, we'll look for possible shorting situation around 0.7881. And that, traders, is our predictions on the top 5 major pairs, along with a really valuable tool that you can hopefully add into your trading if you're interested in doing so. And for those of you who are still struggling to become profitable, I personally know how that feels. I spent a lot of time studying strategies and techniques that ended up not working at all in the markets, and I know how frustrating it can be to consistently lose money in these markets. But thankfully, I was able to find techniques and strategies that worked for me when it comes to being more accurate and ultimately being more profitable as a trader. And at this point in my trading career, I really enjoy sharing that knowledge and information with newer traders that are struggling, again, because I know exactly how that feels. So if you're interested in taking the next step in your trading journey, if you're interested in investing in your trading education, if you want to actually start taking this trading thing very, very seriously, then I've left a link in the description for the EAP Training Program. Feel free to check that out for some more advanced trading. You can see on your screen now what all is included in that program. And if you stay past the outro, you'll see testimonials of traders who have already been through that program, and you can read about their opinions of how helpful that program was in their trading career. With that said, if you got value out of today's video, make sure you go ahead and click that like button for me. Make sure you're subscribed if you're new. I wish you all the best of luck in your future trades. I hope you trade green, and I'll talk to you in the next video.